Well, thanks everybody for joining today. My name is Martin Luplo, head of production here at the Commonwealth Group, and I'm joined by Bryce Zarr, senior processor. We're excited to go through a webinar that we put together for you today. We try to keep things interesting and educational, topics that we think will benefit lenders out there and anybody in the mortgage industry for that matter. And we hadn't done one on processing in a while, so we put one together, which goes over how to close loans faster, which is seems like everybody's trying to do these days. But I see some familiar faces on here, and for those who know who we are, it's great to see you again. And for anybody that doesn't, I'll kind of give a brief overview of the Commonwealth Group, and then we'll get right into it. But we help lenders of all shapes and sizes. We have a consulting division that helps with QC plans and policies and procedures and various types of audits. People call us when their auditors knocking on their door asking them for a document that they've never heard of before. So we're one of the first people they call. We try to help them out the best we can there. And then we also have a fulfillment services side of the business. Obviously, contract processing we have, and then I'd say we're probably most known for our underwriting, contract underwriting, but we've got great QC, so pre and post close QC, and Encompass admin and cybersecurity. And last but not least, we do a lot of condo project reviews via our subsidiary Condo Analytics. So we're excited for everybody to be here today. And Bryce, I'm excited to go through this webinar with you. If anybody has questions, drop them in that chat box or the question box as we're going, and I'll try to address them at the end if that's all right. And we'll try to keep this to as close as 30 minutes as we can, just so you guys have the rest of your afternoon. And we'll also send out the recording to everybody in case you miss any of it. So with that, Bryce Zarr, like I mentioned, senior processor here at the Commonwealth Group. We're excited for you to go through this slideshow here and share some tips and tricks about how to get loans to the finish line a little bit quicker.
Yeah, happy to do it. And before we get started, we're not going to be reinventing the wheel here. No secrets or giving out any shortcuts. Just what we found is effective, and how to get more out of borrowers, and how to drive urgency and deliver that with a white glove service. So with that, we'll get started. A little bit about me. Joined the mortgage industry back in 2020, worked for a big national builder across all loan types, and then had the opportunity to join the Commonwealth spring of last year. Got a certified residential underwriter certification, and for processing began specializing in HELOCs and cash out refis. So this is just a little data that I was able to find, and NPS points are very important here. It's a net promoter score that Strathmore Research Group put together. And that NPS score is essentially how likely someone is to refer a business. This could be any service. And they found that if a closing gets missed, they miss that closing date, their score, which they do out of 100, drops significantly. Just which we kind of all know how imperative it is that they make that closing date. There was I think 18% of closing can be delayed from an appraisal, but the other is kind of issues that we can all handle on our end. And so going to kind of talk about what we can do, what the processor can do to prevent those delays, and why from 2025 to 2019, back when things were kind of at the height, why have closings been delayed? Less volume, kind of should be on top of things a little more. And of course, the number there that Stuart Title gave us was that they estimate 20 to 25% of all closings get delayed. So going to be discussing kind of what we can do as a processor, what that looks like, how we can help, and kind of what our role is. So first and foremost, proactive file review. As a seasoned processor, you want to look at that file and know what's missing immediately, know what you're going to need, and know what you're going to go to the borrower to ask and request. Every loan officer is going to give you a file that's a little different. They'll have some things included. They'll have some things that aren't. They might make notes that are great and some make no notes at all. It's going to be on that processor to know, hey, I know we don't have this. We're going to need it. It's also on the processor to know what's in the file that doesn't need to be there. They're using net proceeds. They have enough assets. We're not going to put those in there. Earnest money. They have enough assets to cover. Move it out so we're not tracking that down. Kind of limiting the request that you're going to make from that borrower. The less things that they have to go track down, less time it's going to take them to do it. So that is kind of one of the more important things is if you want to get that list of items quickly and you want it to be accurate. Another thing, you want a processor that's going to develop a relationship with the underwriter. That way you can start to think like an underwriter, know what they're going to condition for. That way you can get out ahead of it, get it in the file beforehand. So whenever you're getting all the items from the borrower, you have a good idea, okay, the underwriter is going to need this. You have that relationship and kind of know what they're looking for every time. And
To
then
make your point
document.
with less is more, Bryce, and talking from an underwriter's perspective, say you include an extra month of bank statements that you don't necessarily need, and there's a large deposit in there. From an underwriter, it's like if they see that, they're going to have to condition for it or something like that. Whereas if you know you don't need it and therefore you don't include it, then that's going to be something they don't have to ask for, which potentially takes more time to go get.
Less is always more. Absolutely. Yeah. If you can get away with not needing those items, there's no reason to provide it, no reason for underwriting to condition you to track something else down. And then a seasoned processor is going to document every step. And this is one where more is preferred. So whatever LOS they're operating out of, if you've got a conversation log, if you've got file notes, sticky notes, paint the picture for the loan officer, for the underwriter, for management, so that they can go in there and see where the process is. Anytime you have a conversation, email is always preferred, but if we're going to maintain that net promoter score and you want to develop a relationship with these borrowers, phone calls are sometimes, preferred and more personal. So even if you speak on the phone, you want to be documenting what that conversation was. You requested this and a follow-up email after. Phone calls, there's no way to document it. So spoke with the borrower, requested X, Y, and Z. An email is going to get sent out to the borrower after that phone call. Great to speak with you. This is what we talked about. Let's go ahead and get X, Y, and Z over. And then that's going to go into whatever the note-taking service is that the LOS has. That way there's visibility. No one's wondering where we're at. And if there's any delays, it's hands off from the processor. So I'm sure as everyone knows, if you're a new processor that needs training can take a little longer. But what you don't want is a seasoned processor where turn times start to drag and you're submitting the file multiple times. Underwriting gets frustrated. Borrowers get frustrated. There's nothing worse than having to go back to a borrower a second or third time with a single request. You want to keep the request down so they get it all early and they get it all up front. That way you're submitting that full package in. Underwriting gets to submit a full package in and you limit touches. Another thing, if you're ordering appraisal, ordering title, ordering insurance, things that the borrower kind of out of their control, you want to get those done early. And that way, the the borrower can provide everything that's needed, and you kind of move it on to one of those third-party services. Hey, we're pending appraisal. Don't need anything from you. Those are great words to be able to tell a borrower that, sit tight. We're waiting on somebody else that's not you. They're always kind of happy to hear that. So from a processor perspective, working with many different originators, it's imperative to develop a relationship with a loan officer. But it's also imperative for that loan officer to paint the full picture of what the processor is going to need. So if the borrower gives a loan officer, hey, I get a quarterly bonus, and that's where my funds to close are coming from, and the processor does not know that, they might reach out to the buyer, hey, where are your funds coming from? Double requesting things kind of leads to frustration, makes a process makes an organization seem disorganized, and it doesn't boost buyer confidence. So the more organized that an organization can be, the more confidence that the borrower is going to have, the better they're going to feel, the smoother the process is going to go, so that whenever it all wraps up, that NPS score is going to be higher. Communicating, you want to know if there's gaps in employment, communicate that with the loan officer. So open line of communication between the loan officer and the processor. I know some loan officers like to be hands off. Hey, we started the file. Don't bug me until it's done, sort of thing. But if there's red flags, if there's things that are going to make or break a deal, they're going to want to be bugged. Looping them in early, catching things that you're going to see. Hey, this could come up. Hey, we're waiting on a 2-year employment history because they had a gap. That's why we're not in the final approval status. So, kind of working together, learning their process, learning what they expect, and then providing that service to the loan officer as well. So, kind of the main keys to success for a processor that I've found is you do your initial review early and you do it thoroughly. You catch any items that are missing. That way you can go to the borrower early on in the process. Too many times we've seen where it's day 25, they've provided everything, and you're missing a pay stub, and it's, why am I just getting asked about this? And of course, if you're asking about it late and they miss closing, hey, we couldn't get approval in time, your closing gets delayed, we got to reschedule you for next week. The last thing in their mind is, okay, well, they didn't ask me about this. So then they go to closing and they say, well, this could have been prevented. If I would have known that all I needed to do was provide a pay stub. Communicating with the borrowers, setting expectations. So when underwriting reviews and does their initial approval, conditional approval, their approval, and says, hey, we need to get these conditions, giving the borrower a timeline. Hey, this is what we need. If we don't get it back before Thursday of next week, we could delay your closing. So setting those expectations with them that if they don't get anything back, then it's on them for their closing being delayed. Of course, we're not going to point blame at anybody, but rushing and submitting rush requests, you're going to diminish that relationship with your underwriter. Closing's not going to have time to balance docs. It's a snowball effect. So setting expectations with the buyer that you're not going to get your loan unless we have X, Y, and Z. Work with many first-time home buyers who don't know how the process goes. All they've ever been told is how stressful buying a home is. It's the worst. It's such a headache. So setting expectations of this can be a smooth process. we can get you closed. We can get you wrapped up. We can get you in your new home. It's a very exciting opportunity for someone to be able to purchase their first home. And so being able to say, hey, let's get all of these items quickly. Let's be efficient. And there could be questions. So it's not, hey, this is done, because then you have to come back and say, okay, well, actually, we need this. Well, actually, we've got to do this. Having a borrower think that once they provide something and then you have to come back to them and re-request items and nag them for something else. So a first-time home buyer, completely unexperienced, they do not know the process. So communicating with them how it goes, that initial phone call, hey, I'm your processor. My job is to get you final approved, to get you into this house. We're going to make this as easy and quick as possible. The things I'm going to need from you are X, Y, and Z. Underwriting is going to do their review and they might sign off on everything. They might say, hey, we need clarification. So I'm going to come back to you and need to get clarification. I feel like that works a lot better than calling them out of the blue or emailing them out of the blue after underwriting does their initial review. And then they thought they were done. The same with investors. The same with someone who bought a home 30 years ago. Time and time again, you get told, well, I didn't do this last time I bought a house. And you look and their house has been paid off for 40 years. So of course you didn't. Of course you didn't do it the last time. So communicating, setting those expectations. Hey, things have changed a little bit. After 2008, they came in with a lot of new guidance, trying to prevent that from happening again. And just letting them know, it's not the bank. It's not me. I didn't decide this, but my goal is to make this as easy as possible. Another thing that a seasoned processor can do is take the load off of the buyer. So insurance quote, hey, I'll reach out to them. If they're using net proceeds, get the title company, get the CD where they closed. We've got a borrower's authorization in the file. It can go a long way. So taking what you can off of the borrower and doing it right away. That way it's not them. You're not waiting on a borrower to get you any documents that you could get yourself, and doing that early. And then answering questions. Hey, we're going to need this. This is the reason. Again, those first-time home buyers that they do not know, and you would hope the loan originator has set them up for success, but things fall through the cracks. Doesn't always happen. They're unaware of why they need to buy, to provide things. Opening a new line of credit. Let's not do that. Let's stay away from opening a new line of credit that's gonna shoot your debt to income ratio up. Stay away from large deposits. If grandma's going to give you money, we need to know about it. If that's where your funds are coming from to close, we're going to have to get a gift letter. We're going to have to source. So giving borrowers the full picture up front and then handling everything that you can with that borrower's authorization is going to make things a lot smoother. And again, smoother closing, smoother process, timely closings. That net promoter score is just the likelihood of how they're going to refer you. And we're in the referral business. So that is kind of the key points there. And then a little bit, Martin had discussed on that, how the Commonwealth works. We are contract service and provide those and give the same white glove service that your internal processors can give. But guys, that was try to keep it brief. I appreciate y'all being here. I think Martin, if we want to open it up, if anybody has any questions or anything like that, we've got a few minutes left, but want to get you out early if possible.
That was awesome. That was really insightful. I see Connie was asking if we're going to send a recording out. Absolutely. We record all the webinars and we upload them to our YouTube channel and we'll send that out as soon as it's ready, usually about a day or two. Bryce, I had a question for you. And this may be kind of a nuanced one, but like, where do you draw the line in, things that you're looking for in a file as far as, like you mentioned, you want to minimize touches. And each time you open a file and have to touch it, it's time and time adds up and that could potentially delay closings. Where do you draw the line as far as reviewing the file and looking for things as far as, hey, I see these asset statements and I see a large deposit. I keep using the large deposit example. Do you go ahead and condition that for that, like as a part of your processing role, or do you prefer to wait for the underwriter to say something about that, or does it depend on the underwriter that you're working with? How do you handle situations like that?
Yeah, it depends on the severity of what I'm looking at. Job gaps, if you get an application in and they've got a 6 month gap or something on the application and no 2 year history before to support, you're going to go ahead and ask the borrower. Large deposits, if they have to have it, if the funds can't be backed out with just an explanation, or if the assets can't be removed at all, go ahead and ask about it. There's no sense in waiting on the underwriter to tell you you're going to need something if you need it, especially if it's make or break. Which there's kind of the basis there where you've got to have a 2 year history. You've got to you got to know where the funds to close are coming from. Those key components of a file where you're going to have it. It's best that once that processor gets the file, upon doing a review, you're doing your checklist. Hey, I know I'm going to need to ask about this, and go ahead and get in that, because it could make or break a file anyway. So you want to get it out of your pipeline if it's going to be something. I don't have a 2 year history, or I didn't have enough. I had $20,000 in mysterious cash that came around, and that's where their funds are coming from. You're not going to waste your time, letting underwriter, then they can do their diligence and withdrawal, denial, whatever they want to do. But if you keep going back and forth and then at the very end, it's a denial, you kind of wasted everybody's time, and the result was the same as if it would have been whenever you started.
Right. And one other point I thought was really interesting is you said, hey, we've got the borrower's authorization in the file, use it. Because I know when we're talking about our processing services and a common questions, how long does it take from start to finish, right? What's the total time that elapses? And the question we often ask is, well, how responsive is the borrower going to be, right? So
Sure.
as much as you can take off the borrower, the better.
Yeah, those things, if that authorization goes a long way, um, from payoffs to HOI request, VOEs, that authorization is the ticket to get everything that you think might be a hurdle for a borrower. And yeah, how long does it take? Well, setting those expectations with the borrower of, if we don't have this in 4 days, if it's a Monday, hey, before the weekend rolls around, we're going to need this. Hey, before Thursday, if we could get it, that way underwriting can give us a decision before the weekend comes, and I can send you into the weekend with a to-do list. Nobody wants a to-do list, but whenever you're buying a house, there's guidelines and things that we have to do that we're going to need. So yeah, setting expectations, setting firm timelines, and looping in, having the loan officer CC'd on all communication. That way that there's no question of who's taking too long, or what their response was. Borrower might respond with the question only the loan officer can answer, rates, things of that nature. And for visibility, they can see it. They can go ahead. The loan officer can go ahead and see that and answer right away. But yeah, you want to make sure that they're CC'd on that, and just set expectations and let them know that we have to have this. And if they don't get it, there's potential that you're not going to make a closing date.
Right. Um, Well, I guess we have time for one question. Donna wrote in here. I'll read it to you, Bryce. How do you handle notice of incomplete notifications? And I'll caveat that by saying, a lot of the times we do let the lenders handle some compliance options there, or the compliance hurdles. But Bryce, if you have any thoughts on that, I'm sure she'd love to hear it. And then part two is, do you use any document validations for credit, income, or assets? Does that improve on turn times?
Yeah, so for NOIA, from our perspective, we push it to the lender, loan officer, and say, hey, where are we at on this? There's only so much we get our hands tied from a contract perspective with compliance. But going to the borrower, if they want us to go to the borrower on what's remaining, sure. If they utilize a portal that we can send things to DocuSign, follow up with, we'll do that. Trying to get an answer right away. Phone calls, emails, just trying to you try to avoid those, but sometimes you get unresponsive borrowers and they decide that they're not going to move forward and don't tell anybody. So yeah, we try to track an answer down right away, and then let's see if that other question's in here.
Do we use any document validations, or I guess do any customers use document validations for credit, income, or assets? And do those improve on turn times?
So we can use the only, and by that, like sending a VOD,
Yeah,
or use
maybe
of
I can get Donna to clarify offline if
the work number there.
Yeah,
Sure.
yeah, the work number's quick. Often it's expensive though sometimes. But yeah, Donna. Well, I'll send you an email after this if you want me to, and we'd be happy to discuss.
Yeah, I mean, if you could send VODs,
Sure.
do that. If the borrower doesn't have assets in the file, but they're going to be receiving them, it's oftentimes the quickest route. Trying to take away waiting on a borrower, take away wanting them, mess the potential to mess up. It always happens where you're waiting on something, an asset statement to come in, and they send it, and they sent you the wrong month, or they sent you a Wells Fargo, but you needed a Pinnacle. So finding out that, and if you could send a VOD, do that.
Yep. Well, we're coming up on the 30-minute mark, and as we promised, we do want to keep this prompt here. But if you guys have any specific questions for Bryce or myself, please email into info@thecommonwealth.net. Donna, I'll follow up with you after the webinar to make sure we answer your question properly. But yeah, so we are the Commonwealth Group. We'd love to help however we can. We're always around. If you want to hear about how other lenders are handling a specific problem maybe that you're running into, or if hopefully you're getting busy out there and you need some support operationally with maybe underwriting or processing, we'd love it if you thought of us. And we'd love to have a conversation to chat about what that would potentially look like. But Bryce, thanks again. This is really informative. Like I mentioned, if any questions pop up after this, please let us know. But we'll be uploading the recording to our YouTube channel and notifying everybody here once that's been done. So once again, thanks for spending some time with us today. I hope you got something out of this. And we look forward to seeing you again here in the future.
Thank you all.
Thank you.